Welcome to your global financial briefing for early July 2025. In the next 5 minutes, we'll uncover the key market shifts, policy decisions, and digital breakthroughs reshaping the economies of the United States and Europe. Let's start with the United States, where trade tensions have reemerged. President Trump has announced a new wave of tariffs, 25% on imports from Japan and South Korea starting August 1st, and a threatened 10% duty on BRICS-aligned countries, including China and India. The implications were immediate. The South Korean won dropped over 1%, and emerging market investment flows reversed quickly. Major U.S. stock indices responded with a sharp pullback. On July 7th, the Dow Jones fell by 422 points, while the S&P 500 and Nasdaq each declined nearly 1%. Trade-sensitive sectors took the brunt of the damage, with industrials and consumer brands slipping more than 2% in a single day. Yet even amid this turbulence, tech resilience continues. NVIDIA has regained its title as the world's most valuable company thanks to continued demand for artificial intelligence infrastructure. Amazon and Apple followed suit, showing investors' preference for predictable, innovative growth stories in uncertain times. On the monetary front, the Federal Reserve held interest rates steady. However, it revised its economic outlook, lowering growth forecasts to 1.4% and raising inflation projections to 3%. This led to a rise in Treasury yields, with the 10-year benchmark climbing to 4.394%, reflecting expectations that inflation may remain persistent. Meanwhile, consumer spending showed signs of softening. Retail sales in June fell by 0.9%, largely driven by weaker auto purchases following pre-tariff import surges. Still, excluding volatile categories, sales rose 0.4%, suggesting some underlying resilience and more selective household spending patterns. Taken together, the U.S. economy is moving into a phase of recalibration. Trade barriers are redefining supply chains, the consumer is pulling back slightly, and the Fed remains cautious but data-driven. Market volatility is likely to persist. Turning now to Europe, the tone is more balanced, albeit cautious. Equity markets across the continent posted mixed results. While the Stoxx Europe 600 fell modestly, banks and mining stocks outperformed, driven by strong earnings and renewed investor confidence. In a major macro development, Eurozone inflation dropped to 2%, perfectly aligning with the European Central Bank's long-term target. The ECB chose to maintain rates, with President Christine Lagarde emphasizing that further monetary easing would require additional data, particularly from the service sector, where inflation remains sticky. Germany unveiled a major fiscal expansion, announcing a 70% increase in defense spending to reach 3.5% of GDP by 2029. The plan also includes tax cuts and regulatory reform designed to jumpstart investment and economic productivity. Financial markets responded favorably, with mid-cap stocks and real estate indices rising, particularly within the MDX. Meanwhile, the UK housing market demonstrated surprising strength. Mortgage approvals climbed to 63,032 in May, well above forecast, supported by ECB rate cuts and falling borrowing costs. Property analysts now expect annual returns in the range of 7 to 8% over the next 5 years, confirming continued demand in both residential and rental markets. Lastly, Europe made a strategic move in the digital finance space with the launch of EURAU, its first fully regulated euro-backed stablecoin. Developed jointly by Deutsche Bank, Galaxy Digital, and Flow Traders, EURAU is compliant with the MiCA framework and offers instant cross-border settlements for institutions. It positions the EU at the forefront of regulated digital asset innovation. In closing, the global financial landscape is growing more complex. In the U.S., tariff policies and technology resilience are driving both risk and opportunity. In Europe, fiscal expansion, stable inflation, and digital breakthroughs are setting the tone. For investors, consumers, and policymakers alike, the second half of 2025 promises rapid change, structural realignments, and a competitive race to stay ahead. Thank you for joining this briefing. Let's stay informed, think strategically, and continue to adapt as the world economy evolves.